Investors and traders, welcome to the channel Market Chart Pattern. Today is 23rd of July 2023 and I hope everyone is having a fantastic weekend. In this video segment, we are going to take a look at the key US stock indices as we always do. So we will be covering S&P 500. We will also take a look at the futures market. We'll take a look at the Nasdaq 100 futures, the Russell 2000 futures, the Dow Jones E-mini futures, and maybe some key stocks just briefly. This video is for educational purposes only and it is not a financial advice. Subscribers from last week who watched the video will know that we were looking at the S&P 500 cash index. This is something that I like to use for a longer term pattern formation. Normally we are taking a look at the S&P 500 E-mini futures. Those are really good for short-term pattern formations and key levels to be watched. For shorter term trading on daily and weekly basis, cash index I think is more appropriate for a longer term view. That's why we are taking a look at that, but we'll also cover the futures. So what we were watching for last week was S&P 500 approaching the 78.6% Fibonacci retracement, which could have acted as a stronger resistance level, but that was one key level that we were watching for. And the way we were approaching it was that if the market, because of strong momentum on a consecutive closing basis, kept on going higher than the 78.6% Fibonacci retracement level, which came in around 45.40 roughly, then the chances were that the momentum could carry the market higher and maybe challenge the all-time highs coming back from January 4th of January 2022, challenging 4800 level. And if the market finds resistance from this level, there is a chance that the market could in fact go in a pullback or perhaps a correction, and this is what we're watching for in terms of price action. So let's take a look how the price action did over the course of last week. So what we see where the market has closed is pretty much unchanged. It's closed at 45.36, and that is the kind of level we were watching for. So for a couple of days the market did go above the 78.6% Fibonacci retracement. However, what we have seen is 19th of July, the Wednesday, market formed a pattern formation, which is a doji. Doji just is an indecision. Let me try to make it a little bit bigger here. What it means is that throughout the trading day, the bulls and the bears, they had a fight with each other, where one side or the other was trying to control. Sometimes bulls were in power, sometimes the bears were in power, and by the end of the trading day at the close, it was really no one was a clear winner, and we had a candle formation which is indecision. So that's what doji is. And then the next day, which is Thursday 20th of July, we see a candle formation which broke the lows of the candle from Wednesday. The lows were 45.57 spot 48, and it closed below, and the low was 45.27.56 with a close of 45.34 spot 86, and it's a bearish candle close. So that is a formation which could signal that maybe there was selling pressure which is coming into the market. There is maybe some distribution taking place, some players adjusting their positions. And then there was no follow through on either side on Friday 21st of July 2023, and what we have in fact is a candle which is inside the candle of 20th of July 2023, forming an inside bar. So the 21st of July 2023 is a candle which is inside in terms of highs and lows of the previous bar, hence known as an inside bar. Now what we could watch for is some sort of a breakout. If the market begins to close below 45.14, then the chances are maybe it's just gonna go lower and maybe test this 20-day moving average coming around here. And if it begins to close higher than the top of this candle of 20th of July, then chances are maybe it's gonna go and challenge these highs of Wednesday around 45.78.43 one more time. That's also a possibility. However, what we are looking for is that the market just pretty much closed pretty much around the level that we were watching for, so we still have to keep on watching that level. And also the next week is a really key week because on next Wednesday we have the Federal Reserve coming out with the FOMC meeting. So there's going to be an interest rate decision. This is coming from Forex Factory, it's their calendar. What we see is that FOMC statement, these are UK times because I'm based in the United Kingdom, and this is what we see. So maybe there is going to be either very light volume going into this decision where market participants are kind of watching the next Federal Reserve's move in terms of interest rates, or we could see some selling come in as a possibility as well. Nonetheless, the market is trading at key level and we have a key interest rate decision coming up as well, and next Wednesday is going to be a key day to watch in terms of price action and which way the market is going to break over the course of next Wednesday, Thursday, Friday will be key dates to watch. So this is what we are watching. A key level 78.6% Fibonacci retracement still in play in my opinion. Now let's go to the futures. So this is the daily chart of S&P 500 E-mini futures. On the cash market, we have seen big ABCD pattern formation and the 78.6% Fibonacci retracement coming at that key level. And here what we were watching for was this pattern formation in shaded area right here. And what we have seen is pretty much, the market has come back and closed at these levels. So we need to keep on watching this key level again one more time. The key thing to note on the futures market is that market did close above several days in a row above the 78.6% Fibonacci retracement. So this is why we are also covering the cash market, because it's a longer term view. But in terms of futures, the momentum in the market had actually carried it above the 78.6% Fibonacci retracement, and this smaller pattern formation is something which we're watching. Let's also take a look at the weekly charts. This is a longer term weekly chart of S&P 500 E-mini futures. Again, we can see clearly this is where we had the 78.6% Fibonacci retracement come in. We also had a 1.618 expansion come in of this swing here around this level. So this is why it was also important to watch. However, the market has closed above it in futures, and on the cash market it's just hovering around that level. Let's actually now go to the Nasdaq E-mini futures. So this is the market which has been actually leading the US stock indices higher in 2022. So this is the decline when it began in November of 2021. This was the market which began to correction, or began to decline first, and it was leading the other indices to the downside. And in 2023, this has been the index, since around January of 2023, and rather picking up the steam from March of 2023, that this index, which is tech index, Nasdaq 100 E-mini futures chart we're looking at, it began to actually lead the other indices. Now what is interesting to see is on weekly basis it has formed this candle right at some key levels that we were watching for. So we have this 1.618 expansion come in. Just underneath we also had the 78.6% Fibonacci retracement on the futures chart. This was just a zone that we were watching for. The momentum was pretty strong, so the market actually broke 200 points above the 1.618 expansion. But the key thing is a weekly chart, and we are interested in the weekly close, and it has closed below this level. So again, another important key level to watch in Nasdaq 100 as well for the next trading week. Let's quickly take a look at the daily chart. So this is the daily chart, and the key theme for the tech stocks has been the artificial intelligence, and that is something which has really led this explosive kind of moves come in. There was a really massive move when the previous earnings, which were announced by Nvidia, and of course that had a big impact on this stock as this index, the tech index overall. So here, just like the weekly chart that we saw, this one, what we can see is bigger decline. So basically, just like the S&P 500 E-mini futures, 9th of July, we see indecision. Then we see a follow through in terms of the lower prices. The key thing is that it has broken the low of this candle here. It hasn't broken these lows out, so not a swing low which is broken, but it broke below this candle low as well. And of course, this move was much severe in terms of a bear move. So again, it's getting very close to its 20-day moving average, and there's a possibility that we could see it touch right around here, but no key levels broken. So this 14,835 is going to be a key one, because that's going to be a break of a swing low if it in fact market does breach that level. So again, a key pattern, a key level to watch, especially on the weekly chart basis here. And let's move to the Russell. So this is the chart of the Russell 2000. This is the small caps. Small companies tend to be a lot more sensitive towards the interest rate movement, because any kind of borrowing cost will increase if the interest rates keep on going higher, which means a lot more cash flow is going into servicing the debt, etc. So that could have an impact, and that's what we have seen. We have seen this index not perform the way Nasdaq has done, and also the S&P 500. So a different kind of price section in this one. But what it has done is, since you can say pretty much the May of 2022, for about 1 year, a little over 1 year, it has just gone nowhere but sideways, and it has done that right at the 50% retracement of the March 2020, the COVID lows, and the all-time highs it reached around 8th of November 2021. And it's just been coiling here. Maybe it's building some sort of energy, some accumulation before it break out to the upside, or chances are it could also be distribution, but the chances are that it's more likely an accumulation than a distribution. Distributions normally take right at the top, like this one, where we saw then a fake out to the upside, and then we had a nice, well, I shouldn't say nice, but we had a ABCD pattern formation, taking it down right here. Let's actually take a look at this on the daily chart. So in this daily chart, we have this double top and an ABCD formation right here, and ever since it's just gone below here. We became bullish when this 1852 level was broken to the upside, and then there was a bigger deeper retracement which took it back pretty much towards the boundary. We were thinking, in fact, it might actually come down back into this range, but that did not happen, and we were watching for these levels here. It has hit those levels. It's a double top or triple top formation taking place. Too early to say, unless it begins to break some swing lows like this one around here, but the price action over the last 2 trading days has been negative. Let's take a look at the E-mini Dow futures. This is the daily chart of the E-mini Dow futures. This is very interesting because for quite a long time, for quite a few weeks, in fact, we had been waiting that perhaps this was going to go and make this ABCD pattern highlighted in this red lines here. In fact, let me actually write it here so that it becomes visible for everyone. Let's make it a little bit smaller. Then we have B, then we have a C, then we have a D here. And what it has done is it has gone and challenged the highs coming in from December. 13th of December 2022, and it just went above it a little bit, but completing this ABCD pattern formation. It's still way lower than the 5th of Jan 2022 highs, just above the 78.6% Fibonacci retracement. What is really interesting is that so many of these indices we have seen, they are either in terms of cash basis right around the 78.6% Fibonacci retracement, or they have gone a little bit above and they're hovering around that level. We have seen that in the S&P 500 E-mini futures chart. We have also seen pretty much that sort of action taking place in Nasdaq 100 as well, although it's been a little bit stronger and exceeded those levels, and then also now in Dow Jones chart as well. So it looks like a majority of these indices that we like to follow, they are kind of getting aligned, and they have reached or they are around the 78.6% Fibonacci retracement of the highs formed, the all-time highs, and the lows coming in from 13th of October 2022. So again, a very interesting formation. So what we'll have to do is for next week, we'll just keep on watching for the price action, especially on the cash index in the S&P 500. And while we are here, let's just quickly take a look at some individual stocks which are part of the Dow Jones index. So here we have we can take a look at Caterpillar, and what we see is that it's a because the Dow Jones index is a price weighted index, and stocks which are have a higher price, their price movement has an impact on the Dow Jones index. So this is like about $260 stock, and it's just gone and challenged this highs of 30th of January one more time. And look at last two trading days have been bearish for it. Maybe it goes and challenges 20-day moving average right here. JPM, which is the JP Morgan. So we for a long time were watching for this trading range, the 61.8% retracement, and it has broken above that clearly. That's a pretty good sign. And the next thing is, where is it going? It is going right to the 78.6% Fibonacci retracement, which is pretty much touched that, in fact. So another interesting formation. I'll do a separate video about the banking stocks, but the stocks like this, and especially the Goldman Sachs, they have a fairly good impact on the Dow Jones. Here, this is very interesting. I'll do a video about it. It's just gone right to the 61.8% Fibonacci retracement, and this is the zone which we had highlighted in advance, in several weeks in advance. The long-term subscribers will know. In fact, the video about this is still there. And the fact was that as long as this key level for support was held, which is 78.6% retracement, there was a chance we were moving into ABCD formation, and this seems to be the case. However, it seems to have broken this bearish symmetry, or it's rather close to doing that. That remains a point that we should carefully watch for over the next few trading days. Well, I think we need to give it a few more days just because of the ABCD pattern formation. And if you're looking at from a momentum perspective, the 200-day moving average is this gray line, and then we have this 20-day moving average is below the 200. So it's not that strong from a momentum perspective. So getting back to the ES charts again, just to recap what we are looking for in terms of the price action for next week is maybe perhaps a sideways market going up till Wednesday, when the key decision comes out for the interest rate. And the level that we are watching on the cash index S&P 500 is that 78.6% Fibonacci retracement, and that's where the market closed, pretty much around that level last Friday. So still watching that key level and how the market will react and behave. This is what we'll be watching, and of course I'll keep you updated. Apologies for the long video, but I believe there was one due with more details. So thank you very much for watching the video. Good luck and good trading.